Welcome, everyone. Employee Retention Credit. Jody Chesnoff, head of Rosenberg Chesnoff.
Hi, welcome everybody. Thanks for joining us. This is really the first time that we've shared one of our webinars with another professional. And we're doing so because there's a big opportunity for our clients who can qualify for this credit. And with all the new stimulus, the PPP2 loans, and tax season, we feel that our clients would be best served by utilizing some experts to assist here. And please know we're very careful with the service providers that we refer. I think it's important that you know, we do not refer to others for fees or fee sharing. We do not refer to others to get referrals back. We refer to other professionals who we trust, who take care of our clients and who do a great job for our clients. We've been referring our clients to Tom Nally for a few years on R&D credits, and his team has done an outstanding job. He's very responsive, their fees are fair, and while many others charge a percentage of a credit, they don't. They charge for their time and the effort that they put into this. So after this is over, you can feel free to reach out to Jeff, myself, or Tom directly, and we'll be happy to help you navigate this credit. It'll be pretty clear and easy when Tom explains as to who qualifies. The difficulty is going to be preparing the forms and doing the calculations, but I'll let Tom take it from here. Thanks, Tom.
Sure. Thank you, Jody, and thank you, Jeff, and welcome everyone to the webinar. Hopefully we'll be able to give you a good context of what this benefit is and who qualifies and what immediate action items you can take in order to see if you can realize some savings. So a couple of things we'll walk through. First thing we'll do is we'll talk about the basics of the incentive. What are some of the key concepts? What do you need to look out for? Then we're going to talk about what I call kind of the prime case. There's a very easy, straightforward set of facts where if you meet them, you're going to be eligible for some very near-term savings. There's a few other, if you don't meet these prime facts, you might also be able to qualify some other ways. But I suspect there'll be a number of companies that kind of qualify under the prime scenario. And then we'll talk about what type of information we need to run the analysis and kind of the immediate next steps and timeline. And Jeff,
you want me to move on to the slide after that? Okay.
Just move ahead. So one of the first questions that always comes up is, why have I not heard of the Employee Retention Credit before? The Employee Retention Credit actually came about in the CARES Act. So the exact same legislation that gave birth to the PPP program also had this Employee Retention Tax Credit. However, it was of very little interest to small and mid-market companies last year for one very good reason. Originally, under the CARES Act, if you claimed a PPP loan, you could not also claim an Employee Retention Tax Credit, and vice versa. So when companies evaluated both programs, PPP generally produced a much larger benefit than the Employee Retention Credit. It was also, even with all the hoops and applications I'm sure many of you have jumped through for PPP, it was actually in some ways easier to qualify than the Employee Retention Credit. So no one paid much mind to it. Now, fast forward to December of last year, and if you recall, Congress was negotiating with, at that time, President Trump on a large, kind of second or third stimulus package related to COVID, and they produced another large legislative package, which was known as the Consolidated Appropriations Act. And the Consolidated Appropriations Act made a couple of big changes to the Employee Retention Credit. First and foremost, they did away with the prohibition of a PPP loan recipient from claiming the Employee Retention Credit. So if you received a PPP loan, you can now take an Employee Retention Credit. That was a big sea change right there. The other change that they made is they extended the Employee Retention Credit into 2021. So originally the Employee Retention Credit, it sunset at the end of 2020. Now it is good through the second quarter of 2021. The third thing they did is for 2021, they made the Employee Retention Credit both easier to obtain and more lucrative, made it a more generous incentive. So, and when we kind of discuss the prime, kind of the prime facts, you'll see this. But originally, in order to meet one of the main tests for the employee retention credit, you had to have a greater than 50% decline in quarterly gross receipts for 2020 when you compare it to the same quarter in 2019. So if your second quarter 2020 gross receipts were $49,000, whereas your second quarter 2019 gross receipts were $100,000, you met this standard. That 50% has basically been decreased down to 20%. So for 2021, you only need to show a greater than 20% decline in gross receipts for a quarter when you compare it to its 2019 counterpart. So that's really big right there. The other big change was within the employee retention credit, there's kind of a difference between small and large manufacturers, or excuse me, small and large employers. I was just discussing some issues related to manufacturers specifically a minute ago, so it's still fresh on the brain. So under the original law, a small employer had less than 100 2019 employees, and it was therefore easier for them to claim the credit. That's been increased. The benchmark has been increased from 100 employees up to 500. So now you have more companies that employ more employees eligible for kind of this small employer treatment, if you will. And then the third big change is the size of the benefit. So for 2020, the benefit was effectively capped at $5,000 per employee. Now it's effectively capped at $7,000 per employee per quarter. And we have 2 quarters for 2021, so it's effectively $14,000 maximum per employee per company. So we've got an easier incentive to obtain, eligible for with more companies eligible for it and eligible for more dollars. So that's why it's definitely more interesting right now.
I gotta change slides, right?
So here's the prime case that we mentioned. So if you're a company whose fourth quarter 2020 gross receipts were down more than 20% compared to the fourth quarter of 2019, and for 2019 you had less than 500 employees, then for the first quarter of 2021, you're going to be eligible for a $7,000 per employee tax credit. And this isn't just any ordinary tax credit. First of all, this tax credit can go against payroll taxes as opposed to income tax. So if you're a company who's not generating federal tax liabilities, you can use these credits against your payroll taxes. And then secondly, it is a refundable credit, meaning even if you have more in tax credits than you do in tax liability, the IRS will send you a refund for that overage. So if I had $50,000 in payroll tax that was eligible, and I had a $75,000 credit, the IRS not only will refund me that $50,000, they'll also refund me the excess $25,000 as opposed to making me carry it forward or carry it back or what have you. So this is a very powerful tax credit that can be turned into cash fairly quickly, which is a big reason why it's very interesting. Now, if you're one other point I should make, notice that I'm comparing Q4 of 2020 to Q4 of 2019 for an incentive for which I'd be eligible in Q1. The reason why I can do that, it's because of another change that was made. So at your election, you can say like, look, I don't know what my Q1 of 2021 is going to look like. So you can actually elect to say, let me use Q4 as the baseline to determine whether or not I qualify for Q1, if that makes sense. So you don't have to wait until Q1 closes out to kind of measure gross receipts and compare Q1 2021 gross receipts to Q1 of 2019. You can actually say, you know what, I'll take a look at Q4 2020, compare that to Q19 2020. And if that works, I'll use that as my basis to qualify for Q1 of 2021. So that's
Okay,
kind of
so the decrease in Q4 2020 over Q4 2019 qualifies me for the benefit in Q1 2021.
correct.
And then does that go on to Q2 2021 as well? That I would use Q1 to qualify for Q2?
You've got it. You've got
Okay.
it. And then if you don't, let's say that you look at Q4, you compare Q4 to Q4, and you determine like, you know what, my gross receipts didn't decrease that much. You can still wait for Q1 to close out and then kind of remeasure on Q1 and see like, well, maybe my, Q4 wasn't too bad, but I had a dip in Q1 2021 compared to Q1 of 2019. You can then just say like, you know what, I'll just use my Q1 to Q1 as opposed to Q4 to Q4.
Okay.
So,
What about Q3? I mean, can you use Q3, or is it Q3 2020 compared to Q3 2019, or is it specifically about Q4?
when testing for 2021, you can only go back one fiscal quarter.
Okay.
So,
Can
and we're
we
talking,
go back and claim this for 2020?
you can, although, and actually, Jeff, if you go back to the last slide, I'll kind of highlight how that works. So for 2020, you can actually retroactively go back and assess, hey, did I qualify for this credit? And if so, can I take it? However, it's a little bit more rigorous. Number one, for 2020, you have to show a greater than 50% decline in gross receipts, not just a 20% decline in gross receipts. Number two, that large and small employer differentiation is set at 100 employees versus 500. And then thirdly, which will be a key part of the analysis, is you cannot take the same wages for PPP forgiveness and this tax credit. So what a company has to do if they received a PPP loan and they're having it forgiven is they have to look and see is assess, okay, during what period might I have been eligible for the employee retention credit? And during that period, do I have wages over and above the wages that I applied to PPP forgiveness? So, okay. Short answer is there are definitely opportunities for companies to go back and see if they can find some additional savings for 2020. It's not going to be, it's going to be a little bit more complex analysis.
So we're still in 2020, we're still using those old, the metrics that are here in the 2020 column. 2021 is the new easier way to get the credits, but 2020 is still, we can go back retroactively, but it's the harder test to get the credits.
It is, and also, and we're also still limited to the kind of less generous calculation of the credit for 2020. So even if you qualify, even if you have wages over and above your, let's call it your PPP loan forgiveness wages, you're going to be limited to $5,000 per employee, which is still a good credit, but yeah. It's 2021. It's even sweeter.
Okay. So moving forward.
Yeah.
Am I on the right slide here, Tom?
Yeah, actually, if you can go back just one slide previously, there's one little thing I'll highlight. So let's say that you don't meet kind of our prime case. Let's say that you didn't have that great of a dip in gross receipts. There are some other ways to qualify for this incentive. It's a little bit more of a facts and circumstances test. But the one piece of information I'll give you is let's say that you didn't have that great of a dip in gross receipts, but your business was subject to a full or partial shutdown because of a government order. So, and of course, this obviously affects a lot of companies in retail, hospitality, some kind of non-essential manufacturing, other types of industries. So if you were subject to, if you had to partially or fully close your operations because of COVID orders, either at the local, state, or federal level, then you could also qualify under what we call the full or partial suspension of operations, as opposed to just having to rely on this gross receipts test.
Tom, would that count for a wholesaler who sells into resale stores?
Yeah, if that wholesaler had to full or partially close, and this is where it gets really tricky. So if you shrunk back your operations, let's say that you had to put some employees on furlough or cut your hours, what have you. If you had to do that for economic reasons, you actually don't qualify. It has to be specifically because, look, Suffolk County or City of New York or whomever came in and said, like, we're not an essential business, so we have to limit our day in head count by 50%, or we had to close for 3 weeks or something like that. So that's really what we got to look for. We got to actually look for a COVID related closing, because of a government order as opposed to just kind of economics.
Okay. Good.
So what information do we need to kind of help assess whether or not this would make sense? So the big things or the big data sets, of course, first of all, we would want to review wages. This is going to be determined almost entirely on wages. So we're going to look for payroll records for 2020, which would help us assess whether or not there's a 2020 opportunity. And then also for 2021. If we can get basically a year-to-date payroll journal or payroll register for 2021, and based upon the payroll provider we're using, we have kind of an inventory of standard reports, and we can tell you, okay, if you're on ADP, please run payroll data detail report. If you're on JustWorks, run the what is it called? I think it's a payroll journal detail report. I can share that information. Whatever. We just need year-to-date payroll data. We can actually forecast what your payroll will likely be for the first quarter of this year, and that'll allow you to assess the applicability for Q1. The other big thing we're going to need are gross receipts by quarter for 2019 and 2020, because that'll allow us to test whether or not you have any quarters that meet these gross receipt tests. And then the third data set is really going to be your PPP information. And we'll need that in case you want to go, well, first of all, if you took a PPP loan, but if a company wants to go back and see, hey, can I get some savings for last year? We'll need a lot of that data contained within both your initial application and then more importantly, your application for loan forgiveness if you filed it yet, to help us measure, okay, what wages were used for the forgiveness calculation? And are there some excess wages we could maybe use to get the retention credit? But wage data, gross receipts by quarter, and PPP information are the three broad categories of data that we'll need to run this assessment.
So
is there a deadline when these credits have to be filed for?
So good question, Jody. And yes, there is, and it's a matter of kind of assessing what's most timely. First of all, there's nothing that's completely about to roll off the table. However, it could greatly advantage companies to pursue certain opportunities before others. The first being, believe it or not, going after the first quarter of 2021 credits is probably of a greater priority than looking backwards. And that's for two reasons. Number one, knowing if you qualify for Q1 and how much you qualify may be important to know if you're also receiving a PPP, a second draw PPP loan, because just like with 2020, you can't cross the streams with wages used for PPP forgiveness and wages used for this credit. You're going to have to kind of segregate those two out and make sure that like these are my employee retention credit wages and these are my PPP wages. So we want to know what that Q1 2021 number might look like, so that that can help us plan for how we're going to work to get, or help you plan for how you can get the PPP loan forgiven and maximize both programs. That's another reason why we coordinate closely with professionals like Jody, because he's got a great view into those sorts of issues. The other thing is there's actually a way to get an advanced payment of your employee retention credit refund. And we're actually recommending to our clients to pursue this if they can, because what we're finding is that these advanced payments of the refunds actually are paid out much, much faster than just reporting this credit at the end of the quarter and waiting for the IRS to send you a refund check in the normal course of business. Not to get too down in the weeds, but that refund is paid via what's called a Form 7200. We're still waiting on the IRS to publish a 2021 version of that form. When it does, that's basically when kind of the gates open and companies can start actually getting monies for Q1 2021 based on this credit.
So I know we're going to open this up for questions in a little bit, but one of the things I just want to bring up is, can you fill this format yourself and get the credit? Yeah, you probably can. However, because of the complications, you want to be really careful. This is a substantial amount of money that you could be applying for. And if you apply for it improperly and weren't entitled to it and you get the credit, you will be required to pay that back. And it's not like a loan where they're going to give you 5 years to pay this back at 1%. They're going to want that money back immediately if they find out that you did not, if you were not able to get this credit. So you want to be really careful. If you do decide to do this on your own, you have to be really careful that you understand all the rules and regulations before you get yourself into trouble where you don't have the money to pay back.
Absolutely. And Jody, I would add to that. So if a company received an advance refund, they're also going to need to turn around and coordinate with their payroll processor to make sure that the payroll processor correctly reports that on their payroll tax return. So the IRS knows, like, okay, look, this company, yes, this company's claiming the credit, but we already paid them their refund for it. And that requires some quarterbacking as well, which is something that we provide. We prepare the forms, we file them, and then we can also turn around and work with the payroll processor to make sure they do everything correctly on their side so that there's no hiccups.
Can I just ask a quick question on the PPP money? So if I have someone I'm paying $50,000 to, and let's say I use the PPP money to pay them $20,000, I'm claiming $20,000 as a forgivable expense. That I would take that $20,000 away, and then that means that I essentially paid that individual $30,000. Is that kind of the way it works?
Effectively, yes.
Yeah.
And so I mentioned earlier there's limitations kind of per employee on the credit.
Right.
So the way that works is you can qualify up to 10 in 2020. You can qualify up to $10,000 of wage per employee. And then the credit is 50% of the qualified wage. So that's your $5,000 per employee limit.
Okay.
And then in 2021, your limit is $10,000 of an employee's wage per quarter. And the credit's 70% as opposed to 50%. So that's where you get the $7,000 maximum per quarter for 2021. So in your example, Jeff, if you paid someone $50,000, 20,000 of that went to basically PPP forgiveness. Theoretically, you have another $10,000 you could use for the retention credit, which would yield a $5,000 retention credit as it relates to that particular employee.
Okay, beautiful. Thank you. All right. Ready for the next slide?
Sure. Yeah. And so this is we touched on this a little bit earlier, but again, let's say that you don't meet the gross receipts test, or you you're over that 100 or 500 employee threshold. So if you don't meet the gross receipts test, the next best thing you can do is look and see if you have a full or partial suspension of operations. And again, that basically means that you had to full or partially close your facility and had employees working either on furlough or working from home because you were closed due to a government order. Again, where do we expect to see that mostly? Retail, hospitality, non-emergency medical type of situations, and then non-essential manufacturing. That's where we're kind of seeing the most cases of a full or partial suspension of operations. The period where we've seen the most impact, obviously, is Q2 of last year. Right when COVID really started hitting in February and March, particularly around that second week of March, is when a lot of states and municipalities started issuing stay-at-home orders, and that's kind of March and April, and depending on your location, potentially partially into May is where you kind of have the most business closures. So for 2020, if you don't have a quarter with a greater than 50% dip, it still may make sense to see if you had a period of time where you were subject to a full or partial suspension of operations. And then if you're a large employer, meaning for 2020 you had over 100, you were over 100 employees by 2019. If your 2019 employee headcount was over 100, then you're considered a large employer for 2020 credit purposes. You actually can't take the credit based on all your wages. Your credit's limited to just employees who are not providing services. And unfortunately, what that means is it's limited to wages paid to employees that you were paying effectively to not work because your facility was either fully or partially closed. You can't do things like say, well, my team, they were working from home and they just weren't as efficient. If they were still, conducting kind of normal duties, just maybe it was more difficult to do it because you were in a cramped home office or you had to manage the kids, remote school or what have you. Unfortunately, that's not considered not providing services. What we really have to look for are individuals who couldn't work but still received payment. And again,
that's
just
only in the case of a large employer.
yes, large employer meaning you had over 100 employees in 2019. If you had,
go ahead.
I'm sorry, go ahead, Jody.
No, go ahead. I was asking a question. Go ahead.
If you have under 100 employees for 2019, then you're going to, you can take it for all your wages if you otherwise qualified under the dip in gross receipts or the full or partial suspension of operations.
Okay.
And again, for 2021, that 100 employee benchmark actually slides up to 500. So another reason why 2021 why Congress made it a much better incentive for 2021.
So you can see why we brought an expert on, because not everything is so cut and dry. One of the questions that's going to come up for sure is, what are gross receipts? And that's basically your revenue, what you generate as revenue, your sales, or however you want to call it. If you're on an accrual basis for tax purposes, you use an accrual basis for this calculation. If you're on a cash basis for tax purposes, you use a cash basis for this calculation. Now, Tom, are you allowed to, if you're an accrual basis taxpayer, can you utilize cash basis sales figures as well? I don't know if there's any guidance on that.
Yeah, so the guidance from the IRS says you have to follow, I believe it's Internal Revenue Code section 448C, which essentially says you got to do it in accordance with how you're keeping your books for tax purposes. So you can't toggle back and forth between cash and accrual just for purposes of the employee retention credit. If you're keeping accrual books for tax, if you're accrual for tax purposes, you want to use accrual for employee retention credit gross receipts test. If you're cash for tax purposes, then you do cash for this test.
Okay.
All right.
So kind of finally, what are the next steps? I mean, the most immediate or the most immediately important information to gather are gross receipts by quarter from Q1 of 2019 through Q4 of 2020. Because if we can compare quarter over quarter gross receipts for those 2 years, we can very quickly isolate, are there quarters where you might qualify for the employee retention credit, and then everything else flows from there. If you don't have that, again, we could, you can also start looping through and asking questions. Hey, do we, were we subject to a shutdown order at some point in time? But first and foremost, you want to excuse me, run the gross receipts test, which we can do for you, just to see if you meet the gross receipts standard, because that's going to be the easier, more straightforward test to qualify for. If you meet that test, then you can go through, you can get PPP records together and payroll records, and we can model out what we think a credit might look like for both 2020 and 2021. And then it's a matter of prioritizing. If you qualify for Q1 2021, as I mentioned, as soon as the IRS publishes this one updated form, that's when the window opens and companies can start going and requesting refunds. And then either simultaneously, maybe with just a little bit less priority, you can also look at the 2020 opportunities. The reason why the timing is a little more flexible for 2020 is the only way you're gonna get refunds there are filing amended payroll tax returns, which is known as a Form 941X. And you have 3 years from the date that's filed to go back and amend and request a refund. Obviously, you probably don't want to wait 3 years, but it's not quite as time sensitive as if you want to get that advance refund on your Q1 2021. So that's going to be the Q1 2021 advance refund is going to be like your first opportunity to actually get cash savings based upon this program.
So correct me if I'm wrong, Tom, but if someone wants to send you their grocery receipts by quarter for 2019, 2020 for you to look at, and you determine that there's no credit available to them, I assume you're not charging for the time spent on that. Okay, that's great. So it's okay to send stuff to Tom and he'll look at it. However, we want to be respectful of that and not take advantage of that because there are a lot of clients who are going to need his help. So we want to try to be as careful we can with that. But if you're not sure and you think you might qualify, you should feel comfortable sending Tom the data or sending it to Jeff and I, and we'll forward it to him. And he'll do a quick analysis for you to see if it makes sense for you to go further and try to file for this credit.
Definitely. Yeah. And as Jody mentioned, we'll do kind of that front end analysis, no cost, no obligation. So we don't want to, you know, we don't want to bill for our services unless we know that you're going to get savings.
All right, awesome. So Tom Nally from Alvarez Marcel, we have his email address here and telephone number. Jody, his telephone number, and I'm out there too. Feel free to send us those documents or to get in touch with us. We can Jody and I can put you in touch with Tom. You can reach out to Tom directly. I mean, they do charge for the service, but it's a great service to get some of these credits back. And to manage this complexity. So we'll open it up to any questions that you have. We had a couple come through that we were able to answer in the process of going through here. I do have one here that this refund is not related to the PPP. So correct me if I'm wrong, okay, Tom? It is not related to the PPP. The only problem is you cannot use wages that you're using for the PPP to also claim the credit. So there's this overlap there that we have to be careful of. If you're having the wages forgiven, you don't get the credit. Do you mind if we share the PowerPoint presentation, Tom?
No, go for it.
Okay, so I will, after this, we'll make the PowerPoint presentation available. There will also be a recording of this webinar available, so you can check it out again. But I will send out an email with a post and the deck and a link to the video.
Very cool.
So thank you everybody for your time. We appreciate you coming here and listening to what we have to say. We hope that you qualify for some of these credits and we can get you back some of that money to help you maintain your businesses and your employees. It is tax season, so if you need anything from us, please reach out. We'll be as responsive as we can and get in your tax documents, your end of year stuff as soon as possible so that we can get working on it. We don't want to have another 10-month tax season this year like we had last year, so we hope to get everything done as soon as possible.
I do have a question here. Sending PPP loan forgiveness form using 100% of payroll. If you used 100%, if your payroll was 100% covered by your PPP loan, then that payroll you cannot also get the retention credit for that payroll. This is hard to say.
Yeah.
But if on the other hand you applied for the PPP loan and it was 100% of payroll that got you the forgiveness, but you still paid more in payroll than you received in your PPP loan, then you can get the retention credit. Boy, right. I don't know. I think I thought I was going to say that so clearly and straightforward. Let me know if that makes sense and I can try it again, guys. I'll write it down. It's easier when I write it down.
Okay.
All right. Thank you everyone for attending, and we will let you know about our next one as we announce them. Thanks everyone.
Thank you.
And thank you, Tom. Really appreciate you taking the time.
No, thank you. Have a good afternoon, everyone.
You too.
Bye.